Good evening, everyone. Good evening, students. How are you all doing? I hope you're doing great. Welcome back to our auditing. And we are on the last lecture of our audit of banks. And our lovely chapter, very good chapter. You get to learn so much about banking sector. The structure, the syllabus is so good. And it makes you deep dive into various ways in which banking sector works. So we are on the last leg, and today we'll be focusing a lot on the auditor's procedures because we have understood the structure of the banks very well, and now we'll be focusing on what does an auditor actually do. So that is what today's class will be about. And so sit upright with books in your hands, with notebooks in your hands, with pen, pencil, whatever you want, and get ready for the next 2.5 hours of being alert and enjoying the class, because whenever you study properly with enjoyment, you learn faster, you will retain longer. So welcome back, students, and we'll get started. All right. So we studied up until agricultural advances last time. I hope you all have been studying at home, and I hope you have been revising continuously, because that is the only secret, that you have to revise and you have to do as much writing practice as possible. There's no other very secret. That is the main secret to get good marks in audit and take interest in the subject. Okay. So we have studied up until then. I'll ask you some quick questions. Let's see. We'll refresh a little bit and then we'll continue. So some quick questions. For short duration crops, when does it become NPA? For short duration crops, when does it become NPA? Let's see who's fastest fingers first. 2 seasons, outstanding. Very good. The first answer has been given by Adil. Very good, Adil. All right. Now, this is a little tough one, but how does an auditor understand the risk management system of a bank? Write all the 5 points. Take time, but let's see who writes first. Don't look at the book, try to recall. I have revised it in each class. Today's fourth session, I have revised in all 3 sessions. What are the 5 points? What are the 5 things an auditor will understand about risk management system? I'll give you a hint. I gave you example of what are the risks in an online class and how we manage it. That is the risk I gave you, and mitigation of risk. So I gave that example. So try to remember. I'll give you a minute for it. It will take time. So let's see who writes first. All the 5 points. You can write in short, just for quick revision. By 6:04, you should mention. It's already 6:03. By 6:04, the answer should be there. It's already 6:04. So time's up. TCWG involved in control. Balamurgan has come up with the answer. Very good. Oversight and involvement of TCWG, importance of risk, control activity, monitoring activity, reliable information system. Very good, Balamurgan. Absolutely correct answer. Very good. So I hope you wrote this on your own and you have not seen the book. Okay. Dia has also given all the 5. Very good, Dia. Very good. I'm very happy. Now, the next question is for D2, that is doubtful asset D2, what is the rate of provisioning? For D2, what is the rate of provisioning? For D2, what is the rate of provisioning? 40. For D2, the rate is 40%. Very good. All right. For substandard, what is the provisioning? For substandard asset, what is the provisioning? 15. Very good. All right. 15%, ma'am. Okay. All right. Then which is the newest form of bank released by RBI? Which is the newest form of bank? Payments bank. Very good. LFAR full form. What is the LFAR full form? LFAR full form? Quickly. Long form audit report. Very good. That's it. That was just some quick flash revision. Now we'll restart with where we left last time. Computation of drawing power. 30th June, Adil, is the date by which we have to submit LFAR. But very good. You got one more point revised that 30th June, by 30th June, we have to submit the LFAR. Very glad, students, you have been able to give answers. Now let's come to the next topic, that is computation of drawing power. So, if we are still continuing the story of Mr. Don, let's continue. One second. Yeah. We'll continue the story of Mr. Don. So what happens with Mr. Don? Mr. Don has taken working capital facility, okay? So he has taken cash credit from the bank. He has taken cash credit from the bank. So we remember that Mr. Don was making some biscuits, okay? So he was doing biscuits work. Now he has taken 30 lakhs of working capital limits, okay? So this becomes his sanction limit. This becomes his sanction limit. Why did bank give him 30 lakhs? Because they might, how did bank come up with the 30 lakh number? They would have assessed his balance sheet, P&L. They usually take something called as projections. Projections means what do you expect your turnover to be in next 3 years, next 5 years. So these projections are taken, and on the basis of that, an average working capital requirement that is needed in business like this is calculated by the bank. And according to that, a working capital limit is given, also on the basis of how much security you can give and how much is your credit worthiness. So bank gave you 30 lakh rupees, but it is not necessary that you will spend 30 lakhs. But also on the second way, bank will also not every month allow you 30 lakhs. So every month we have to send to bank stock statement and data statement, okay? So stock and data statement is sent to the bank. On the basis of this, every month, bank calculates something called as drawing power, which means I have given you a limit of 30 lakhs, but on the basis of how much work your business is doing, how much you are buying, how much you are selling, according to that, I'll decide that each month how much limit you can use. So each month they calculate something called as drawing power. Okay. Now suppose when you calculate it, it comes more than sanction limit. Suppose it comes more than sanction limit. So it means that sanction limit is 30 lakhs, but your business is growing so well, so much business is happening that there is so much stock that your drawing power becomes calculation. The drawing power calculation comes to 35 lakhs. What can you actually use? Can you use 30 lakhs or can you use 35 lakhs? Can you use 30 lakhs or can you use 35 lakhs? Suppose while calculating on the basis of your stock statement and data statement, the actual value of calculation comes to be 35 lakhs. Can it be used? Can 35 lakhs be used or can 30 lakhs be used? Everyone, 30 lakhs. Very good. So DP that can be used, DP that can be used will have to be equal to or less than SL. Okay. It has to be equal to or less than. All right. So if the DP calculation comes to be more than this, then you still have to use maximum of sanction limit only. So even if DP calculation comes to 35 lakhs, we can use only 30 lakhs. Okay. Now, this thing is so important. Sending this stock statement and data statement every month is considered so important that if DP is calculated using stock statement older than 3 months, then account will be NPA. Okay? Listen, if DP is calculated, means drawing power is calculated using stock statement that is more than 3 months old, it is so serious that your account will be considered that it has become irregular. Okay. So that is how serious the matter is. So as an auditor, what do we do? As an auditor, we have to check DP calculation. I have to check DP calculation. I have to see stock statement. I have to see data statement. Okay. I have to see DP calculation. I have to see stock statement. I have to see data statement. And I have to see at the end of the year, when they send their audited financial statements, I have to tally this. What does this mean? It means, let's say I want to calculate DP for March. For the month of March, for March DP, the client would have sent stock statement. Suppose when they sent the stock statement that month, they showed closing stock as, let's say, 50 lakhs. After 6 months, let's say in September, audit was done. Let's say in September, audit was finished. And that time stock is showing 60 lakh rupees. So what is the question that the bank and the auditor can ask? That as per the stock statement that you sent me 6 months back, because you have to send stock statement every month. That time you told me your closing stock is 50 lakhs. But your audit report is showing that your stock is 60 lakhs. So why is there a difference? What was the issue? Okay. And valuation method, did you use different? And if you use different, then I should also be sent with the same thing. More is not that much a problem, but this bank might even not worry about. But what if September audit report showed 30 lakh stock? And the stock statement they sent me is 50 lakhs. And that is why as an auditor, it becomes very important that you go through so whenever you are going for audit, you can go through the DP calculation, stock statement, data statement, and also compare it with the returns submitted by the borrower in GST, to tax audit, in statutory audit report. All these places you can check and see whether the stock details that they have sent to the bank is tallying with the year-end figures or the GST returns. Okay. So this is one important audit point that we need to keep in mind. Okay. Now, let's see a few theoretical points. Then I'll show you how to calculate DP. So first, let's finish a few theoretical points. Then I'll solve one question for you. So you will be completely clear with DP calculation. Okay. So let's come here. Drawing power, generally addressed as DP, is an important form of cash credit facility. Drawing power is the limit up to which a firm or a company can withdraw from the working capital limit sanction. Just remember this for any kind of MCQ. Okay. So sanction limit is drawing power is a limit up to which a firm or a company can withdraw from the working capital sanction. Just remember this. It is different from sanction limit. Sanction limit can include a lot of things. It includes the total exposure that a bank has. It includes everything that they have given to you. On the other hand, drawing power only refers to amount calculated based on primary security minus the margin at a particular date. Again, this sentence is important for MCQ. Please remember. Okay. DP refers to amount calculated based on primary security less margin as on particular date. Then what should be, all accounts should be kept within drawing power and sanction limit at all times. Okay. Just yesterday, I saw one sanction letter in which it was very clearly written that if you cross the sanction limit even for one day, the penalty will be 2%. And if you cross DP, drawing power, for even one day, the penalty will be 7%. So there's lot of. Ma'am, is it compulsory for client to do audit of accounts for CC loan? No, it is not necessary. It depends on the bank policy. So if you are running a very small business in which you have taken a CC of just 2 lakh rupees and 3 lakh rupees, and it's a small proprietorship firm and your limit is not crossing as per the Income Tax Act, then the bank will just ask for the details that are required as per their scheme, in which they give loans usually less than 10 lakh rupees without audit reports. So it depends on the bank policy and scheme. Okay. Your doubt is clear, Dia? So DP will be less than, it can be less than or equal to also. Not less than is not the correct word. DP can be equal to SL also. Okay. So please remember, at all times, it means not even one day. Okay. Not even if it crosses it even for one time, for a moment in the day, and then immediately it is done. So the system can impose penalty. Okay. So it's very serious matter. The accounts in which exceed the sanction limit or drawing power or are against approved. So anyway, if you are irregular, it needs to be brought to the notice of management and head office regularly. So what is the duty of the bank? Bank should ensure that drawings are covered properly by current assets. How will they know that it is covered properly? They need to get current stock statement regularly. How will they know they are covered adequately? When they get current stock statement. But do you think it's possible for all big businesses to send each month? So sometimes they also allow you to use quarterly method, but it should not be older than 3 months. The outstanding in the account based on drawing power calculated from stock statements older than 3 months is deemed as irregular. Okay. Auditor's concern. So where will auditor step in? So auditor will step in that stock statement, quarterly returns, other statements submitted by borrower should be scrutinized in detail. Audited annual report submitted should be scrutinized properly. The monthly stock statement of the month for which audited accounts are prepared and submitted should be compared, and reasons for deviations should be ascertained. I already explained this to you. Okay. So whatever stock statements, quarterly returns are we submitted, we check in detail. Audited annual report also should be checked in detail, and the stock statement and audit report should be compared. And if there is any difference, any deviation, it should be seen why the difference has come. Calculation of DP. So exact for each bank, they can have even very minute policies, but there is a general formula that I'll teach you. But each bank can have their exact guidelines that is approved by the board of directors. So it needs to be ensured that drawing power is calculated as per the exact guidelines formulated by the board of directors and agreed upon by the statutory auditors. Just remember this for MCQ. Formulated by board of directors and agreed upon by concerned statutory auditors. Special consideration should be taken regarding proper reporting of sundry creditors for the purpose of calculating drawing power. That's a general statement. Now remember this point specially. Stock audit. Stock audit should be carried out by bank for all accounts having funded exposure of more than 5 crores. Now please focus on this word, funded exposure of more than 5 crores. So what does this mean? So suppose I have taken a term loan, working capital loan, LC, and total is going 6 crores. But my CC is 3 crores. Will stock audit be done? Will stock audit be done? My working capital, that is CC, is only 3 crores. Will the stock audit be done? Only one person has answered. Let's see what others think. Why will stock audit be done? Diya, Prince, Pooja, Kuldeep, you are all saying yes. Why is your answer yes? Total is crossing 5 crore. What is this saying? If the total funded exposure, okay, just 1 second, I made a very, very small mistake. Total funded exposure, I just wrote LC by mistake. Yeah. So if total funded exposure is crossing more than 5 crores, then you have to do which audit? Stock audit. Now I'll just tell you a little bit practicality of stock audit. What happens in stock audit is, let's say bank. What does bank do? Bank does not go on its own. Bank empanels an auditor. This auditor cannot be your concurrent auditor or your statutory auditor, okay? So bank empanels auditors who are interested in doing stock audit. So this auditor will go to Mr. Dom's business place and do the stock audit. There is a format made for it, and here the purpose is to see that whether stock exists and whether it is belonging to the firm. So right, ownership, so you check the existence, you check the ownership, and you check the valuation. So these three main things auditor will focus on in stock audit. There is a big format that the bank prepares, okay? So the bank gives you the format in which you have to report, and bank gives you the scope of work, what are your powers, everything is given by the bank. In what time you have to complete the stock audit, what will be your fees, everything is given by the bank to you. So you go to the bank, to the borrower's place, and then you prepare stock audit report, and then you submit not to the borrower, you submit the report to the bank. Then you submit the report to the bank, okay? So this is how stock audit is done. So when, suppose Pranav is appointed as a statutory auditor, so he can go through the stock audit reports that were prepared for big, large advances, and he can go through and see if any adverse comments were made by the stock auditor. All right. So that is stock audit. So remember this point. If the stock audit should be carried out by all banks for accounts having funded exposure of more than 5 crores. Auditors can also advise for stock audit in other cases if situation is needed. So there is no, I am not teaching you that in under this section 5 crores. No, that's a general rule that if funded exposure is more than 5 crores, we go for stock audit. But if in some other case also, if the stock is if the total exposure is 4.5 crores and you feel that in this company we need to go and do the stock audit, that can also be done. Branches should obtain stock audit from lead bank. Where does lead bank happen? Lead bank, other banks. In which kind of loans does this happen? Quickly tell me, what was the word? In which kind of funding lead bank and other banks concept come? Consortium. Yes. Consortium banking, which means joint loans have been given. So if you are a joint loan, so each bank will not send for each stock audit. There will be a single stock audit done from the lead bank. Okay. The report submitted by stock auditor should be reviewed during the course of the audit, and special focus should be given to comments made by stock auditors on valuation of security and calculation of drawing power. So this is something we have to put our focus on. So this is a solved question. I'll do an unsolved question for you so that you can have confidence. Okay, let's see this. Let's see an unsolved question, and I'll solve it with you so that you can find confidence. Okay. Everyone on this page, can you come all on this page? You can come. You can see the screen also, but just keep one small notebook or something in your hand. So very rarely we have any calculation based questions, but this is one of the places where we have a calculation based question. Okay. So let's see. CAP, so just write in big here, DP calculation, so that when you're revising, you don't miss it. It's a good question. CAP is conducting stock audit of a borrower availing cash credit facility of 100 lakhs from the branch of a bank. The cash credit facility is against security of paid stocks and debtors up to 90 days. The margin stipulated is 25% for stock, 40% for debtors. Further following information is available. All right. See few things. Cash credit is always for, just underline this, paid stock. Okay. Stock should be paid stock. Do you remember I made a small, while I was explaining this chapter to you, this small thing I made and showed you? Do you remember from last class? The drawing power minus unpaid stock minus margin. Debtors is debtors minus debtors more than 90 days minus margin. Okay. This is the generic formula. Okay. Now, same thing is being told here that cash credit is only for paid stock. Okay. So unpaid stock we have to minus, which means इसको ऐसे समझो, बैंक किसके लिए वर्किंग कैपिटल दे रहा है कि आपका पैसा लग गया है, योर मनी हैज बीन स्पेंड बट यू हैव स्टिल नॉट रिसीव्ड मनी फ्रॉम द डेटर्स. ये है ना कॉन्सेप्ट. व्हाट इज द कॉन्सेप्ट? आपने पैसा खर्च कर दिया है लाइट पे, इलेक्ट्रिसिटी पे, रॉ मटेरियल पे, बहुत सारी चीजों पे. सो यू हैव स्पेंट मनी but you have not received money yet because आपके business का cycle is 40 days or 30 days. That is the concept of working capital. I taught you in the first day when I taught you about Mr. Don. Okay. So जो आपने pay ही नहीं किया, उसके लिए मैं आपको fund क्यों करूँ? So if you have not paid for the stock, you don't need money for it. So I am giving you money for something that you have done. So that is the logic behind it. So let's see the question now. What is it saying? Stock is, so stock is 125. Okay. Stock kitna diya hai? 125. Damaged stock. So stock is security, hypothecation. Will bank consider damaged stock as a saleable stock? Will bank consider the damaged stock as a security? No. So we will not consider it at all. So we will reduce damaged stock. How much is it? 5. So how much are we left with? 120. Okay. Now what is the next information? Value of debtors is 50 lakhs. Value of debtors exceeding 90 days is 10 lakhs. Value of creditors for goods. What is creditor? Less creditor. See, I can simply teach you formula. You can go and apply formula. But I'm teaching you logic behind the formula. Why creditors are reduced? Because creditors are basically unpaid stock. What is creditor? Creditors are basically unpaid stock. And we want what? We want paid stock. So how much are the creditors? 50 we will reduce. So how much are we left with? 70. So value of paid stock. Value of paid stock is how much? 70. Now, how much is the bank's margin? 25%, which means bank will not pay you for 100% stock. Bank will only pay you for 75%, which means they'll keep a margin of 25%. So what we'll do? Paid stock minus 25% margin. So 70 minus how much? 25%. How much will it be? I think it will be 17.5 lakhs. 17.5, I think. Is it correct? 17.5 lakhs. And then it would be, what will be the lefting part? 52.5 lakhs. Done. So how much did we get? Final. This is our first part, part A. Now let's come to part B. Datas. How much is the datas given? 50 lakhs. Will we take datas that are more than 90 days old? No. Now that is your headache. I will not give you money for them. So less daters that are greater than 90 days. How many datas are greater than 90 days? 10 lakhs. So we will reduce 10 lakhs. So 40 lakhs. Then how much is the margin? 40%. Less 40% margin. So how much will it be? Less 40%, 16 lakhs. So what will be the final value? 24 lakhs. So how much is our drawing power? DP equals to A plus B. So 52.5 lakhs plus 24 lakhs equals to 76.5 lakhs. Now in the question, is the DP computed by CAP correct? Is the DP computed by CAP correct of 82.5 lakhs? No. Everyone clear with drawing power? Everyone clear with drawing power calculation? I'll just quickly repeat. Stock you have to remove any obsolete stock, damaged stock, you have to reduce it. You have to reduce creditors that are unpaid stock, and then you have to minus the margin. Then you'll get A. Then you have to take datas and you have to remove any datas that have become bad, doubtful, datas more than 90 days old. You have to remove all that. Then you have to minus the margin and you'll get B part. So then DP would be 52.5 plus 24, 76.5. How much is the sanction limit? 100 lakhs. How much is the sanction limit? 100 lakhs. How much DP did we calculate? 76.5 lakhs, 76.50 lakhs. So how much can he withdraw? How much can he maximum use? How much can he maximum use? Sanction limit is 100 lakhs and DP calculation is 76.5. So how much they can maximum use? 76.5. Perfect. Will you remember the formula even logically now? ऐसा नहीं है कि सिर्फ रट्टा मारना है. You don't just have to mark it up. But do you understand why it exists? Why the formula is the way it is? Okay, very good. Clear formula. Okay, good. So this we are done. Everyone clear with DP calculation? That's it. We are done with drawing power. We are done with drawing power and now we are moving to the last phase of our audit of bank. Now we are on the last phase of audit of bank. Now we are doing actual audit. Okay. Now we are doing actual audit work. So now technical part is mostly over. Now we are going to use our principle of audit again. Okay. So before we actually see any answer from the book, let's discuss something. Okay. Let me discuss something with you. Okay. So let's say that you are appointed auditor. You are a new auditor of a bank and you want to see internal control system. You want to see internal control system regarding advances. Just write any random point that comes in your mind regarding internal control system. What all should be there to ensure that internal control system, what internal control system you will check as an auditor so that you can create your audit procedure properly. I'll give you a start that there should be a proper internal control system regarding creditworthiness. There should be a proper system. Don't say generic points. Say points that are very, very, see, segregation of duty you need for uh, cash also, you need for deposit also, you need for demand draft also. Don't say generic point. Say point that is very, very specific to advances. So there should be a good internal control system to check credit worthiness, because on the very good Pranav, security. Now let's explore Pranav's point, okay? Let's see securities. Regarding securities, what all you will check? Regarding securities, what all you will check? What all systems should be there regarding security? Valuation, very good. Then value of security properly checked, good. What else? What if I have given you a gold loan? Then there should be good internal control system of what if gold loan has been given? Then there should be good internal control system regarding physical verification. Yes, physical checking. Okay. वैल्यूएशन के टाइम हो जाएगी फिजिकल चेकिंग, बट हियर द मेन थिंग इज इट विल बी इन आवर कस्टडी. यस और नो? गोल्ड किसके कस्टडी में होगा गोल्ड लोन में? इन हुज कस्टडी विल द गोल्ड बी व्हेन यू गिव अ गोल्ड लोन? So we have to keep it safely or not? Okay. So custody also becomes an important internal control point. Okay. Then someone said title deed. Very good. Which means we have to see if registration is required in bank name. Registration if required in bank name of the security. How? So if you are doing registered mortgage, then you have to do registration of title deed in the name of the bank. Then what else? What else? Do you remember assignment? Do you remember assignment? So if I am taking loans on shares, bonds, LIC, then again bank name should be assigned. Okay. Then what else should be internal control system? Margin taken properly. What does it mean by margin taken properly? If someone has given me 10 crore of property, can I give them full 10 crore of loan? Can I give them full 10 crore of loan? So each loan should have what? Proper margin. So bank should have a proper internal control system that for which type of loan, how much margin will keep. Like above we saw in DP calculation, there was 25% and 40%. So this is an internal control system that how much margin is there. Okay. Okay. So other than that, we are only checking internal control system. Don't audit advances. See, I'm trying to teach you difference. We are not, are we auditing advances right now? मैं advances को check कर रही हूँ. Am I auditing advances right now? Only one person has answered. No. I am seeing that how much I will have to check advances. I am checking कि advances का internal system कैसा है. So that I can know that how much effort I have to put in checking advances. Do you understand? So we are not designing procedures for audit of advances. We are seeing that what all we need to check to understand the internal control system. So we are doing evaluation. Evaluation of internal control system of advances. We are not actually auditing advances. Okay. So we'll check margin. Then next is there should be proper internal control system regarding all the necessary documents. Now necessary documents can have everything. It can have from application form to KYC to all the agreements to all the stamp papers. to all the hypothecation details. Everything should be done. So when we go to banks, we also have indemnity, affidavit, so many things are there. Documents in original should be there for title deeds. All these documents should be properly kept. So that all, now this is all pre-sanction. This is all pre. What all we need to keep in mind regarding internal control system of post-sanction? After we have given the money, then what should be there? What is the internal control system? There should be system to check end use of funds. What does it mean by end use of funds? What internal control system should be there? Do you remember I told you that if I buy a machinery and for that I take a loan, check will be given in my name by bank or directly in the name of the supplier? If I buy machinery, the check by bank will be in the name of supplier. So what is this? What is this? This is internal control. If I buy a home, the check will be given in the name of builder or my name. The check will be given in the name of builder or my name. What is this? Internal control. If I buy a car, it will be in the name of the seller. Okay. So all these are internal control system for what? So there should be proper internal control systems for end use of funds. Is that clear? So very important part of internal control system is end use of funds. Okay. So you should have good systems to ensure that the money is going to the right person and in the right way in which we wanted it. If I take an education loan, I'm going to study in a foreign university. Do you think they'll pay me the fees or directly pay fees to the foreign university? They'll pay fees to me or directly pay to the foreign university? If I'm taking an education loan directly to the university. Understood? So everyone clear? So one of the very important internal control system that all banks are doing very well. Okay. They do this. Recently, I came across a fraud in which, so I cannot reveal all the details. I'll just tell you basics. What happened that someone had taken a loan for some machinery from a seller. Okay. The bank was given all the seller details with GST number and everything. Okay. So seller, all GST details were there and bank sanctioned the loan and gave the money to that seller. They gave the check to the seller and seller encashed it. Then some auditors came in the bank and they checked the GST number of the seller on the website and they came to know that the seller is registered that they do sewing business. Sewing means normal sui dhaga ka business. They have no relationship with gear machinery and all. So that is when we came to know that the bank, that borrower has committed fraud with the bank. Do you understand? So he made some collusion, you remember, you might have studied in earlier chapters of audit. So the borrower did some collusion with the seller. So what does it mean? That the local bank people, all the managers and all failed in doing their job of good internal control system of verifying the seller before giving the money to seller. Is that clear to everyone? So these things can happen if internal control system is violated or not followed properly by the team or the employees of the bank. So end use of funds, very important internal control system. Because अगर ये system बहुत अच्छे से follow हो रहा है तो आपका आधा headache कम. If the system is being followed thoroughly by bank employees, half of your worry will be over. Okay. So end use of funds needs to be checked properly. Then this we are doing post. Then there should be proper drawing power register maintained by the bank, where they regularly update any kind of things that are happening, plus regular go down inspection. So most of the banks have the internal rule that once in a quarter, they'll visit the cash credit accounts. Okay. So once in a quarter, they'll go see whether the unit is still running, machines are running, there are enough workers, there is enough stock. So they'll just do regular go down inspection. Okay. Then next is account is within limits of sanction limit plus DP limit. This is regularly checked. This is actually done by the system. System alerts you. So there should be mechanics in your system that alerts you if there is any kind of violation of sanction limit or DP limit. Okay. And operation of any advance operation of each advance account should be reviewed at least once in a year. Now, what does it mean by review? More and larger. Now, let's say, what does it mean by review? So what happens? We can see their account statement and see whether they have too much cash deposit, too much cash withdrawal, too much of credits is coming from their own sister companies, or too much money is going out to their own sister companies, too much money is being paid. Credits are there, but credits are mostly from the own sister companies or own directors. So this is how you see whether the transactions are appearing to be genuine that happens in a business, or they are indicating some sort of problem with the company. So that is called as review of the account. Okay. So these are all part of internal control system. So now what we have seen, actually, we have seen a big answer in which now I'm sure you can at least write 6 to 7 points on your own. Okay. Let's see the answer first. Come here first. Come to page number 10.37. Come here. So this is a different question that can come separately in exam, that how do you evaluate? Agar internal control, they're asking, the answer is different. If they're asking audit of advances, the answer is different. Please remember, don't mix up. We are doing how to check internal control over advances. So the auditor should examine efficacy of various internal controls over advances to determine nature, timing, and extent of his substantive procedures. In general, internal control over advances should include that the bank should make an advance only after satisfying themselves about creditworthiness of the borrower and obtaining sanctions from appropriate authorities. All the necessary documents, that is agreements, demands, promissory note, hypothecation, should be properly executed. So someone said signature, right? Someone said that, ma'am, we need to check whether signatures are there. I saw someone write this comment. Who was that? I'll just scroll up. Proper signatures. John Mohammed wrote it. So here is what your answer comes in, John. That it is executed by the proper parties means it is properly signed. So they have given the consent. The compliance with terms of sanction and end use of funds should be properly ensured. Sufficient margin as specified in sanction letter should be kept against the securities. If the securities are taken in the nature of shares or debentures, the ownership of the same should be transferred in the name of the bank. This is assignment. All securities requiring registration should be registered in the name of the bank or otherwise accompany to give title. This is mortgage, a registered mortgage. Then, in case of goods in possession of the bank like gold, contents of the packages should be checked at the time of receipt. The godown should be frequently inspected by responsible officers. Drawing power register should be updated every month. These entries should be checked by an officer. The account should be kept within both the drawing power and sanction limit. All the accounts which exceed the sanction limit or drawing power or are otherwise irregular should be brought to the notice of controlling authority regularly. And operation of each advance should be reviewed at least once in a year, more frequently for large advances. So I divided this answer into two main ways, that you can remember it: pre-sanction formalities and then post sanction. What is pre sanction? देने से पहले credit worthiness, security की valuation, physical checking, registration if bank name is required, bank name assignment, margin is taken properly, documents are executed properly. For post section, and use of funds is done properly, drawing power register is maintained, regular go down inspection is done, account is within limits, operation of each advance is reviewed at least once in a year and more in larger advance. Is everything clear? Everyone clear with the answer? Can I move on to the next answer? Okay. Now come back to 10.36, audit of advances. Very, very important for theory question. Very, very important for theory question. So the question is very simple. In carrying out audit of advances, the auditor is primarily concerned with obtaining evidence regarding the following. Okay. Now, how many of you can tell me all assertions that are required for balance sheet items? What are the assertions required for balance sheet items? Don't look at the answer. Think and tell me what are the assertions required for a balance sheet item. You have studied in audit of financial statements, audit of items of financial statements. Can you tell me what are the assertions required? ECCVRP. So what is E? Existence, completeness, yes. Rights and obligations, valuation and allocation. Then presentation and disclosure. Okay. Everyone clear? Existence, completeness, rights, obligation, valuation, allocation, presentation, disclosure. Now let's not look at the answer. Let's just see this. To check any balance sheet item, you have to check these assertions. Yes or no? Everyone? Yes or no? This we have to check. Okay. Now, suppose I'll ask you randomly. In advances also, do we have to check whether all advances are correctly valued? Do we have to check whether all advances are correctly valued? How can we check valuation? We can check that by checking provisions for NPA and everything is properly done. Yes or no? We can check valuation by checking all the provisions are correctly done. Then advances, do you remember I showed you how much are funded, how much are non-funded, how much are others, then how much is priority sector. Do we have to do proper presentation of advances? That they are under correct heading? They are under correct type of loan. So we have to check presentation. Yes or no? Then how do we check completeness? Which means no advances are missed. All advances are recorded. Yes or no? How do we check completeness? That all advances are properly recorded and there is no unrecorded advance. Correct? Okay. Then we have to see existence, rights and obligations, which means we have to see that the advances that are shown in the balance sheet. So suppose advances shown are 300 crores. So that means that they are actually my advances. Does it mean that if I am Bank of Baroda, can I show advances of SBI in this year? Can I show SBI in this year? Can I show SBI loans in my account, in my balance sheet? No. So I have to ensure that if balance sheet is showing advances of 300 crores, that they are actually due to me. They're actually due to the bank. And they are outstanding as on the date. Okay. They are not previous year. They are as on 31st March, they are outstanding and they are all due to me, which means due as in DUE. They are all due to my bank. So if you follow these principles, you have this answer. Okay. Let's go from back to first. Appropriate provisions towards advances have been made as per RBI norms, guidelines. What is this? Valuation and allocation. Advances are properly disclosed, classified, described as per accounting policy and practices and statutory requirements. What is this? Presentation and disclosure. The stated basis of valuation of advances is proper and appropriately applied, and recoverability is properly checked. So this is again valuation and allocation. There are no unrecorded advances. You tell me which one is this? Which assertion is this? There are no unrecorded advances. Completeness. Now, one I left purposely. Let me see if you are able to tell. Amounts due to the bank are appropriately supported by loan documents. They're appropriately supported properly by loan documents. Which assertion is this? Which assertion is this? One person has replied. Let me see other people reply. Which assertion is this? Only one person has replied. Amounts due to the bank are appropriately supported by loan documents. It is both. It is existence plus rights and obligation. Okay. You check both that the loan exists, plus you also come to know that it belongs to us. Okay. That the loan belongs to us. So existence plus right and obligations both. Then advances represent amount due to the bank. Again, rights and obligation. Amounts included in balance sheet in respect of advances which are outstanding. That is again rights and obligation. Now you understood how to remember this answer. So valuation, easily you can write 2 points: valuation of advances and proper provisions. Presentation, disclosure as per the relevant practices. Completeness means no unrecorded advances. There should be proper documents to support it, which means existence of the loans. And two right and obligations, that it represents the amounts due to the bank and it is outstanding as on the date. Now you understand how to remember. Quickly tell me, will you get confused between answer of internal control system of advances and audit of advances? Do you think you will get confused now? It's very different. When we are doing audit, we are using assertions. Okay? We are checking all the assertions. And here we are checking generic, what is the system that exists for advances. Okay. That's it. Now this is just, you can read once. Okay. This we can just read because it's like a mixture. So I don't want you to get confused. So we'll just read it once. The auditor can obtain sufficient appropriate audit evidence about advances by study and evaluation of internal controls relating to advances, and this is extra. So that is why this is not even the topic. The auditor can obtain SAAE by doing the study and evaluation. So they have given you points for this. And what are the extra things we can do to find sufficient appropriate evidence? Check the validity of recorded amounts, examine loan documentation, review operations of the account, review existence of valuation of security, check compliance with classification and provisioning, carry out appropriate analytical procedures. So you don't have to worry about this. Just worry about this answer: audit of advances and internal control over advances. We are done with advances. Clear, everyone? We are done here with advances. Right and obligations. Cutoff is in this P&L items. Right and obligation. You remember? Existence, ownership, valuation. For any asset and liability, we check existence, ownership, valuation. Ownership is right and obligation. Okay. All right. So where were we? Yeah, in carrying out substantive procedures, the auditor should examine all large advances, while other advances may be examined on sampling basis. So usually when we go for audit, we can just say, give us your top 25 accounts, give us your top 30 accounts. So like that we can say. So we get the whole list. From the other list, we can do on sampling basis, but usually if it is a large advance, we check the whole thing. These accounts, the accounts are identified to be problem accounts need to be examined in detail unless the amount involved is insignificant. So if the amount is very low, like someone has taken a loan of 50,000 rupees, 70,000 rupees. So even if they are not paying, even if there's problem, we won't go into too much detail. Advances which are sanctioned during the year or which are adversely commented by RBI team, concurrent auditors, internal inspection should be included in auditor's review. So when you are making your list that what all we will check, do you remember the first, initially we did one answer? That as an auditor, we go through these many reports. Do you remember? So when we are trying to make audit plan, we go through other reports, previous year audit reports, last year inspection reports, RBI's report, concurrent audit report. Same point is being repeated now. What point is being repeated? That when you are checking any advances, you have to check reports made by previous team. And if they have included some names in that, you please pay attention to it. Okay, so here I'm closing the topic audit of advances. Everyone clear? I'm closing this topic now. We'll move on to next topic now, that is P&L items. P&L items. Advances is done. Audit of revenue items. Okay. Subsection 1 of Section 29 of Banking Regulation Act requires that P&L in Form B of third schedule should be as follows. Okay. So just remember this for MCQ. Section 29, subsection 1 of Banking Regulation Act 1949. Okay, requires P&L in Form B of third schedule. So this is a generic format that's given to you. So if you will see, income side will be income earned and other income. Expenditure means nor interest, the main expense. See, what is the main income? Interest earned. What is the main expense? The interest given. Other is operating expense. Operating means all the salaries you pay, rent you pay, electricity you pay, maintenance you pay, and other provisions and contingencies. And then appropriations means transfer to various reserves and dividends. All these things will cover. So all this is a structure that is available. You don't have to memorize this structure. It is just for your understanding. Now, following items are included under this head. So again, you don't have to memorize like this whole list, but you should know that what does it include in income and what is interest earned and what is other. So general, you should have general knowledge about it, not you have to memorize this A, B, C, D, E, F, not like that, okay? So interest earned means any kind of interest you are earning on advances, bills discounted, interest you are earning on your own investments, interest on balances you are maintaining with Reserve Bank of India or other banks, any other kind of interest that is not included in above three. So these are the main three. Any interest that we are earning on advances we have given, bills we have discounted, investments we have made, and lot of banks maintain balances with other banks and RBI. So those balances also give you interest. So these are interest earned. Other income is mostly commission, exchange, brokerage, commission of bills of exchange. Do you know that if you do IMPS, so how many of you know difference between IMPS, RTGS, NEFT? IMPS, RTGS, NEFT. How many of you know? Can anyone tell me? I'm not asking for full form. I'm not asking for full form. Okay. Okay. Forget IMPS for now. I'll ask you a question. You just tell me yes or no. Is NEFT and RTGS both online transaction? Just give me yes or no. Is NEFT and RTGS both online transaction? Okay. Balamurugan has actually given the correct answer already. Very good. Okay. Now, both RTGS and NEFT are online. Okay. In NEFT, do you think the main difference between NEFT and RTGS is the amount you can transfer? Is the main difference between NEFT and RTGS is that RTGS you can transfer big amount and NEFT is for smaller amount. Do you think that is the main difference? It is just one of them. Yes, very good, Deepak. Time of settlement is the main difference. Time, please remember that all of this was created before UPI. Okay. So imagine a pre-UPI world. So what happened in RTGS and NEFT? That NEFT also I can do from my phone. I can transfer the money. So suppose I want to transfer money to Deepak. I'll transfer 25,000, but will Deepak receive it immediately? Will Deepak receive the money immediately if I've transferred NEFT to him? If I've transferred 25,000 to him from my account, will he receive it immediately? No. Bank will process it in batches. But if I do RTGS, if I do RTGS to Deepak, will he receive it immediately? Yes. But bank placed a condition that we will do RTGS if it's more than 2 lakh rupees, right? So the amount difference is secondary. The main difference is time of settlement, and IMPS was actually OG UPI, okay? In which if I transfer you money now for small amounts, you'll receive it immediately, instantly. What used to happen? For small amounts, people had to use NEFT, but it was in batch, okay? If I want to do instantly, I had to use large amount. So if I wanted to instant plus small amount, what is left with me? IMPS. Everyone clear? So if I want to do instant plus small amount, IMPS. Instant plus large amount, RTGS. Small amount plus in batches, NEFT. Everyone clear? So if you know, many corporates, so for example, if I'm running a business, I will usually have a corporate account or a current account. So usually it's difficult to do UPI. So if I want to transfer money immediately to some seller, I can do IMPS. But do you know most of the banks usually take charges for IMPS? Most of the banks usually take charges, usually 5 rupees plus GST. 5 rupees plus GST. So can this also be an income for the bank? Now I am coming to the main point, that any kind of commission or anything you get on DD, NEFT, RTGS, LC, guarantees, letter of comforts. Letter of comforts means letter of credit is based on a security. Letter of comfort is without security. No one gives it anymore as per my knowledge. Any kind of loan processing fees, mobile banking fees, credit card fee, debit card fee, rent from lockers, government business commission, agency commission, brokerage on security, fee on insurance referral. So this you can just read. There's nothing, you don't have to memorize this list. It's just for general knowledge. Commission on mutual fund clients, then service or transaction banking charges, then income for rendering other services like custodian, demat services, investment advisory, cash management, fees-based services, profit on sale of investments, profit or loss on revaluation of investments, profit on sale of land, buildings, assets, profit on revaluation of fixed assets, profit on any exchange transactions, means forex and any foreign transactions, income earned by way of dividends, miscellaneous income. So this is just a generic list for you to know and to just use it for your general knowledge. Now let's talk about audit approach and procedures. Let's talk about audit approach and procedures. We'll take a 10 minutes break here. We'll take a 10 minutes break here and come back so that we can then continue in one go without stopping. Okay. Then we can just, this much is pending, I think around, how much is pending? Yeah, 0.48 page. And where we are right now, 0.3. So that we can do 10 pages continuously without stopping. So we'll come back after 10 minutes break. All right. See you soon. Hmm. Hello, student. We are back now. Quickly let me know that you are here by dropping a message so that we can restart. Okay, Linga is here. Pooja is also here. Kosher is here. All right. So we have students back. All right. So let's get started. So what we are starting now is audit of revenue, right? So before I teach you exactly the points, think it this way. The income from advances, there could be hundreds of variety of advances, right? And it becomes very, very difficult that we are able to evaluate each and every of this income on manual calculation basis. Don't you think so? It will be difficult for us to, as an auditor, to audit all of these income individually, one by one, and checking each and every voucher that has happened during the year. Don't you think so? It will be difficult and almost impossible if you think about a statutory central auditor, or if you are auditor of a very, very large branch, it becomes extremely difficult. And that is why the first point, this says, auditor's concern that we have to obtain reasonable assurance regarding recorded income that has happened during the relevant period, and there is no unrecorded income, and income is recorded at appropriate amount. Okay, so our in general, what do we want to obtain? We want to obtain a reasonable assurance that all the income has been recovered, there is no unrecorded income, and income is recorded at appropriate rate. Okay, no unrecorded income and recorded at appropriate rate. Now there is RBI directions. RBI direction says that in respect of any income which exceeds 1% of the total income of bank, if the income is reckoned on gross basis, or 1% of net profit before taxes, if income is reckoned next of taxes, it should be considered on accrual basis. What does it mean? You don't have to calculate all this in exam, but I'll just tell you what it means. Okay. It simply says, if any single type of income, any single type of income is there, okay, and it is material, that is, it is big enough. This is just for your explanation, students. This is just for explanation. If it is big enough, then it should be on accrual basis, right? But how do we decide what is big enough? How do we decide what is big enough? So for that, RBI has told two possible benchmarks. It has given two possible benchmarks. It has given two possible benchmarks. What does it say? If the income is considered on gross basis, then compare it with 1% of total income of bank. And if it is more than 1% of the total income, that means you have to record it on which basis? Accrual basis as per AS 9. Second, if income is considered on net basis after some cost you have incurred, then it should be 1% of net profit before tax. So I'll just quickly repeat it. So how do we decide which income is material that it will show separately as accrual basis? If the income is considered on gross basis. So for example, you are getting some commission on bills for collection and all. So that commission is considered on gross basis. You are not deducting any cost from it. So you have to think of it as 1% on total income of the bank. So from total income, you have to take 1%. If the income, so for example, 1% of total income is, let's say, 6 crores, and the income from commission is 8 crores. So we have to recognize it on which basis? Accrual basis. But if the income is considered on net basis, for example, recovery income. So you have recovered some money, but you have incurred some stamp charges, some lawyer charges. So you have deducted cost from it. And if there is any net basis income that you are calculating on net basis, then we can't take total income. Then we have to take 1% of net profit before tax. Is that clear? So don't worry that any deep calculation question and all come. You just have to know for theory. Gross basis, total income. Net basis income, take from net profit. Easy. If it's a gross basis of income, total income. If it is net basis income, take from net profit. Quickly let me know if it's clear. Everyone? Clear. Okay. Kuldeep is saying just one more time, ma'am. Okay, I'll repeat it. So what does this say? Is it talking about audit right now? First tell me. Is this point about audit? It's not about audit. It's teaching us what are RBI directions. It is saying that some income can be recorded on accrual basis, some income can be recorded on cash basis. But if the income is very material, you have to record it on accrual basis as per AS 9. Okay. Interest on advances. Interest on advances. What did I teach you? As soon as your EMI becomes due, do we record the interest income? As soon as your interest and EMI becomes due, do we record the interest income? Yes or no? In normal advances. Why? Because interest from advances is a material income. Yes or no, Kuldeep? Interest from advances is a material income, and that is why we recognize it on accrual basis. But if some income is very small part of banking sector, then we will recognize it only on cash basis. So how do we decide that which income is material? So there are two benchmarks to decide it. If income is considered on gross basis, which means the income that is into question, like interest on advances, is it a net basis or gross basis kind of income? Do you deduct anything from the interest? When you take interest on advances, do you deduct any costs, any expenditure from it? No. So what kind of income it is? It is a gross income. It is an income that is calculated on gross basis. So if the income is on gross basis, you have to take, this will be your benchmark. Your benchmark will be, if it is more than 1% of total income of the bank. It means if total income of the bank is 100 crore and the income that we are talking about is at least 1.5, more than 1 crore, then we will recognize this on accrual basis. Everyone clear? And if the income is determined on net basis, which means it is an income in which costs are deducted, then you don't have to take total income. You have to take 1% of net profit before tax. Everyone clear now? Kuldeep, doubt clear? So if it is a income that is on gross basis, then total income. If it is income on net basis, then net profit before tax. All right. Don't worry, you don't have to be a PhD on this. You just need to know the basic theory. Okay. Then if any item of income is not considered to be material as per above norms, it may be recognized only when received, and auditor need not qualify their report in that situation. Simple. Okay. Banks recognize income such as interest fee on accrual basis as it is earned. It is an essential income of accrual that it should not be unreasonable to expect its ultimate collection. This is all basis of AS 19. In modern banking, the entries for interest income are automatically generated. So basically, these 3 points are about same thing. Okay. These 3 points are about same thing. Now, if revenue is uncertain, what happens in NPA? Do we recognize on accrual basis? If it becomes NPA, do we recognize on accrual basis? No. Then we have to recognize when it is actually realized. And if it is already, if you become NPA, then you should be reversed. Okay. This will apply for government guaranteed accounts also. This is already done. Already done. Okay. Next. NSE. So if you have interest on advances against term deposits, NSE, IVP, KVP, LIC, You can take into income account on due date if adequate margin is available. Do you remember I taught you that if you have taken loan against FD, NSC, IVP, KVP, we don't have to classify it as NPA, even if it is overdue for more than 90 days. Okay. So same way, income also we don't have to classify as per NPA if adequate margin is available. Now bills purchased. If in case of bills purchased outstanding at the close of the year, the discount received should be properly divided between 2 years. So if you remember that if the bill is taken from February to next July, and there is a broken period that you have gotten money of, let's say, 1 lakh rupees. So you have to keep 2 months income in this year and 4 months income in next year. Understood? So if some bill was discounted in February, and it's going to be paid in July, and in between March the year will close, then 2 months income here and 4 months income will be divided like this for bills for collection. Okay, this I think you might have studied in 11th, 12th, bills discounted also. Then bills for collection. Do you know what is bills for collection? So bills purchased is a type of funding. It's a type of loan. But bills for collection is a service in which I am collecting the bill from the borrowers, which may be outstation or out of country on your behalf, and then depositing money in your account. So here the bank earns something called as commission. Okay, here you earn commission. Here you will have to see that the bill has actually been collected from the drawee either by bank or through his agents. So the commission income can only come, the commission of the branch becomes due only when the bill has been collected. So what line I'm saying, that only you have to remember, that the bill has actually been collected and the commission becomes due only after the bill has been collected. So if you have recognized income before that, that is not correct. Okay. Next. Renegotiations. Do you remember restructuring of loans? Any kind of restructurings? So if you're doing any renegotiation, rescheduling of outstanding debts, that you can recognize on accrual basis. But we just have to see that we have done it properly, and we have to do test checking for it. So again, not very important. Whatever was important, I've taken in detail. So this part is important and this part is very important. This part is important, NPA part, and this NPA part is important. Remember these 4 points more importantly, okay? Now, reversal of income. Reversal of income, I already taught you that when either entire income accrued or credited to interest amount should be reversed and provided for if the same is not realized. It will apply to government guaranteed accounts also. In respect of NPA, fees, commission, similar income have accrued should cease to accrue in current period and should be reversed or provided for in respect of past periods. In case of banks have wrongly recognized income in the past, should reverse the interest if it was recognized in income during the current year or make a provision for equivalent amount. Furthermore, the auditor should inquire if there are any large debits in the interest income account that has not explained. It should be inquired whether there are any communications from borrowers pointing out differences in interest charge and whether appropriate charges have been taken. Just remember this point. It's a little special point. First 3 points we already know. Why is this point a little special? What does it say? Interest income means there should be only incoming entries from it, yes or no? Which means we have received the money. But if there are any debits in that account, which means money has been taken out from it, then you have to see. So I'll tell you an example of when this actually happens. So suppose I have taken interest from customer at 8.05%. Okay. But actually, as per certain terms and condition and as per some revisions by RBI, it should have been at 7.75%. So I have to give that money back to the borrower. Okay. So that happens many times in the bank, that there was some system update delay or there was some wrong amount or wrong ROI there in the system and the customers was charged extra. So if that happens, you need to reverse it. That is what it is saying. It should be inquired whether there are any communication from borrower pointing out difference in interest charge and whether appropriate action was taken. So because of this, sometimes debits can happen. Okay, that's it. Okay, next. So AS 19, have you all studied AS 19? Have you all studied AS 19? So here nothing much is there. If you are running a leasing company and if you are supposed to receive money, okay, so lease amount you have to receive, let's say every month, and then it was not received and you put it as accrued income. So if it becomes non-performing, then it should be reversed. Anything new? Anything new for you? So if you receive lease payment, if you don't receive the money, then it becomes, okay, it becomes, you have to reverse it. All right. Takeout finance. Now, this is a new concept. I'll explain the concept to you. It's not explained properly. It's given properly, but I'll explain to you with a small example. So suppose I'm constructing a mall. Suppose I'm constructing a mall, okay? So a mall can have a long duration of loan. So sometimes banks have this arrangement that bank A is saying, I'll give you loan for 3 years for mall completion. But after mall completion also, they have a lot of work till the shops are sold and everything. So there is bank A. Now there is bank B who has made a prior agreement to take over this loan subject to mall completion plus 50% sale or 50% sale or lease of shops. Then I'll give you additional 10 years of loan. So what does this mean? It means there are two banks involved, but at one time only one bank is involved. Bank A is saying, I will take up your project, I will give you loan, and in 3 years, I will give you loan only for 3 years. But if in 3 years you are able to complete your mall, and if you are able to give 50% of your shops for lease, this loan will be taken over by Bank B, and he will give you loan of 10 years. So total you can enjoy for this project, you can enjoy loan of 13 years. This is called as takeout finance. What is it called as? Takeout finance. Everyone clear? This is called as takeout finance, in which one bank takes over the loan of the other bank on certain terms and conditions. Is that clear? Okay. Now what has happened? A takeout loan is a method of financing whereby a loan that is procured later is used to replace the initial loan. More specifically, a takeout loan or takeout financing is long-term financing that lender promises to provide at a particular date or when particular criteria for completion of a project is met. Everyone clear? A loan that is procured later to replace initial loan. It is a long-term financing that lender promises to provide at a particular date. Either they will decide a date beforehand or they will decide a criteria beforehand. These are usually done for property development. Okay. So in takeout finance also, if based on record of recovery, the account is classified as NPA by the lending bank, it should not recognize income unless realized from borrower or taking over institution if arrangement so provides. What does it mean? If in bank A, this becomes NPA, then unless and until bank B properly pays you in full and takes the whole loan, Unless you receive the whole thing, you will recognize it on accrual basis only. Everyone clear? This is actually a very, very large topic, but just a small introduction is given to you. Is this basic introduction clear? It's a very, very large, complicated type of finance, but it's very small, just small introduction is given to you. Okay. Now I have to ask you a question. Suppose I have taken a car loan. Okay. And my EMI is 15,000 rupees. So I have missed 3 EMIs. Okay. So I have totally missed 45,000. Now this 45,000 will have both principal and interest. Yes or no? This 45,000, why the other bank will take? So because they already have an agreement, there is a prior agreement. And also, Kuldeep, there are something called as asset reconstruction companies. Many companies buy NPAs from banks. They purchase it and they take it on their account to recover it. So their job will be to do the reconstruction of the loan, to renegotiate. So they will not be involved in daily banking activities. They are only B2B. So if you'll search for it, if you'll Google it, you'll come to know there are many asset reconstruction companies who buy NPAs. Here, though, there is prior agreement. That is why Bank B is taking it. Of course, if in the agreement it is mentioned that I will not take over this loan unless it is running normally, then it will not take over. So it depends on the agreement terms and conditions. Anyway, so where were we? So suppose I have taken a car loan. The EMI is 15,000 per month. 45,000 is the EMI. Total that I have missed. Okay, missed EMI. This 45,000 includes both principal and interest. Suppose I don't have 45,000 right now, but I have paid a lump sum of 25,000 to the bank. So there is partial payment by me. I have not been able to pay 45,000. I have paid 25,000. How will bank allocate this? Will it first cover this EMI and then partially cover this EMI? Or first it will recover all the interest, then it will allocate to the principal? Or first it will recover all the principal amount and then partially allocate to interest? What do you think should be the method? What do you think should be the method? Cover interest first, okay? Cover interest first. Why not EMI wise? First EMI is cleared because it is the oldest. And then second EMI, which means both principal and interest are covered. What happened suddenly? Okay, which means it has both principal and interest, and then maybe second EMI interest can be covered. No, you don't agree with me? All right. So just I'll let you know, there is no right answer or wrong answer for this. It is a matter of accounting policy. Okay. It is a matter of accounting policy. So what does it say? So mark this as important. Partial recoveries of NPA. In absence of a clear agreement between bank and borrower for the purpose of appropriation towards interest, banks are required to adopt an accounting policy and exercise it in uniform and consistent manner. The appropriate policy is to be followed to recognize income when certainty attaches to realization, and accordingly the amount can be reversed or re-recognized or not recognized, depends. Interest partly or fully realized in NPA can be taken to income. However, it should be ensured that credits towards interest in relevant account are not out of for fresh or additional facilities. Very important. It means to pay this loan, to pay this 25,000, if I have taken another personal loan from Bajaj Finance, is that a correct way of resolving NPA? Is that a correct way? taking another loan to pay off previous loan. Is that a correct way of recovering NPA? No. So simple it is saying that as an auditor, you have to see that if money comes in the NPA account, if any credits come, then it is not due to additional or fresh facilities given to the borrowers. That's it. Next, come to memorandum account. Memorandum account, think of it like this. So let's say I have 10 NPAs. Okay. Am I recognizing the interest income? I am not recognizing their interest income. Okay. So I'm not recognizing, which means any bank account entry is being done. Any bank entry, accounting entry is being done of this interest. Please tell me. Suppose in this 10 NPA, 10 lakh of interest was supposed to be my income. But is this entry, is this 10 lakh being recorded anywhere? Quickly tell me. Is this 10 lakh being recorded anywhere? But what if I want to keep a track that how much notional income or how much income I should be earning, but I am not earning? I should be able to track it somewhere, but I cannot make any accounting entry for it. It cannot be part of my P&L or balance sheet. So that is when we create something called as memorandum account. It is only an internal account, internal control account. It is not, the effect of this does not come in the P&L or balance sheet. So when accounts turn NPA, bank should reverse the interest already charged and not collected by debiting P&L and stop further application of interest. However, banks may continue to record such accrued interest in a memorandum account in their books for only control purposes. For computing gross advances, interest recorded in memorandum account should not be taken into account. So this is just like an extra record I'm keeping to keep a track that how much money I'm losing by not getting interest from these 10 NPA accounts. Everyone clear? So this is called as memorandum account. Okay. Interest from investments. Interest income from investments. So any income that you have from government securities, bonds, debentures, any other investment as interest or as dividend, you have to normally recognize it as interest income from. So it will go in your P&L. But if it is an income from dividends or subsidiaries from your own subsidiaries and your own joint ventures abroad or in India, you don't include. So MOA to be prepared from which date? Date of NPA, Kuldeep. Date of NPA. MOA not, it's not memorandum of association. It's just memorandum account. Okay. It has to be prepared from the date of NPA. Okay. It's like a side book you are maintaining to note down. इसका इतना पैसा आना चाहिए, इसका इतना पैसा आना चाहिए, इसका इतना पैसा आना चाहिए, इसको मुझे इतना पैसा देना है, ऐसा. So you're just maintaining a record of it. ठीक है? So when it is interest income, so if you have made investments, banks usually make investments, you can record all of that as income. But if you have earned any dividends from your own subsidiaries plus joint ventures, this income will not come in under the head of what? Under the head of interest income on investments. Then profit on sale of investments. Any profit is shown as net profit or loss. Any profit or loss on revaluation. Then if investments are to be valued at periodical intervals, then depreciation or appreciation in value should be recognized and shown to P&L. So nothing special. Profit hai, loss hai, to P&L mein dikhao. Interest income hai, to P&L mein dikhao. But dividend income from subsidiary and joint venture not to be shown in the P&L, not to be shown under the head of interest income. Next, come to expenses. Expenses is shown as three main heads. Interest expense, operating expense, provisions and contingencies. Okay, let's think of this thing. So suppose I'm running a bank, suppose, and there are lakhs of customer. Okay. So Kuldeep is a customer, Anil is a customer, Pooja is a customer, John is a customer, Dia is a customer. All of you are customers. Like that, there are lakhs of customers. Every one of you keep spending money from your saving account, and hence you keep getting saving interest rate, and you know that saving interest rate fluctuates also. Sometimes it's 2.75, sometimes it's 4%, sometimes it's 4.5%. So it fluctuates a lot. Do you think we can manually calculate and check everything? Do you think it's possible to manually calculate and check the interest expense? Hence, again, here the analytical procedures will be very useful. Why analytical procedures will be useful? That agar if total deposits are 500 crores, then approximately this much interest expense should be there, or you can compare with previous year. So in this part, we learn a lot about few samples where we will check in detail, but overall we will apply analytical procedures. Okay. So interest expenses, interest on deposits, interest on any kind of borrowings and others. Operating expenses will be payment toward provisions for employees, rent, taxes, lighting, printing, stationery, advertisement, publicity. Depreciation will be there. Directors' fees, allowances, auditors' fees and expenses, legal expenses, postage, telegram, telephones, repairs, maintenance, insurance, marketing, other expenses. Do you need to memorize this list? You tell me. You need to memorize this list? Operating expenses? No. Okay, it is for your general knowledge. Provisions and contingencies. Provisions made for NPA. Provisions for taxation. Provisions for any diminution in the value of investments. Provision for any kind of contingencies. Okay. So we'll see each one by one. Audit approach and procedures. Audit approach and procedures. Everyone pay attention. Here, whatever I'm telling you, please underline it. When we are doing audit of interest expense, you are concerned with overall reasonableness of the amount by analyzing ratio of interest paid on different types of deposits and borrowings to average quantity during the year. In modern banking, the entries for interest expense are automatically generated through CBS system. The bank should obtain from bank an analysis of various types of deposits outstanding at each quarter. From such information, you should do a weighted average interest rate, and then you compare this rate with actual average interest rate paid on the relevant deposits as per annual accounts, which means, so suppose there is March quarter, there is June quarter, there is September quarter. Here it's 200 crore, 250 crore, 280 crore. So I can just say, okay, in this quarter, the average rate was, let's say, 3%. Here the average rate was 3.5%. Here again the rate was 2.75%. And I'll calculate an amount, and then I can see, compare with actual. Compare with actual interest expense. Everyone clear how to do audit? We can take data of quarterly basis. We can take data of deposits. We can take data of deposits. We can take average interest rate. We can calculate average interest and then compare it with actual interest expense. Clear, everyone? That's it. You don't have to do actual calculation in exam. This is just theory. So, obtain an analysis of various types of deposits. For each quarter, work out a weighted average interest rate, then compare this rate with actual interest paid, and see if any difference, if it is material difference. Any doubt till now, please quickly tell me. Okay. Yes, for each type of deposit, Kuldeep, each type of deposit. Because there could be FD, there could be recurring deposit, there could be savings deposit. So you can take for each class. Okay. You can take for each class. It's completely your decision. This is just to give you an idea of what you can do. So if you are an actual auditor, you can take your call and how much you will divide the type of deposits, because in savings account also there can be 5 different types of saving account. In FD also there could be many different types, right? So in how much parts you will divide it, that is on you, but you can take various types of deposits and then work it out with weighted average interest rate. Is that clear? To get an idea, yes. We cannot check perfectly, right? We cannot check that how much interest was paid to each borrower, because there would be like not borrowers, depositor, like there could be crores of depositors. So I cannot go and check each person. So I can just get an idea कि भाई 2 करोड़ का deposit है, तो भाई 3 करोड़ का या 4 करोड़ का interest expense legitimate लग रहा है कि नहीं. I just get this अंदाजा जो कहते हैं ना, analytical procedures. Okay, reasonable, does it appear to be reasonable? Next, the auditor should also compare average rate of interest paid on deposits with corresponding figures for previous years and analyze any material difference. So what is another way for me to analyze? I can take past 3 years of data, that when it was 200 crores last year, the interest expense was this much. Before that year it was 180 crores and the interest expense was this much. So if this year it is 250 crores, how much should the interest expense be? So that we can do. So you can obtain a general ledger breakup in which you can have division between savings and term deposits for each month and each quarter. You can do analysis month on month basis or quarter on quarter basis and see if there is any variances. Okay. You should examine whether interest expense is considered in cost analysis. He should understand the process of computation of average balance and recompute the same on sample basis. Average balance, previous year's figures. Yes. What does it mean? So if I'm auditor for 2025, I can check P&L for 2029, that when the deposit were 180 crores, how much was the interest paid? And if the deposit are 200 crores this year, how much should the interest paid be? So here, what do we see? Again, I'm just summarizing it for you. If interest has been paid, first method is current year, get all the data of each quarter and find an average rate, multiply with it and check with the actual figure and see whether it somehow matches each other or not. Next way is to check this year's figure and compare it with the corresponding figures and see if there is any difference. You can also get multiple breakup of the data into savings account and terms account, and you can do the analysis on month basis, quarter basis, and see if there is any variance. Trend analysis, very good, Anil. Yes, trend analysis. See, I'm not going in detail because you have studied SA 520. All of you have studied SA 520. All of you have studied SA 520, trend analysis, analytical procedures, ratio analysis. Okay. So those philosophies only we are using. That same philosophy we are using. Now I have not made you star mark anything right now. Okay. Star mark this part. Star mark this part. On test check basis, this is the main thing. Earlier was analysis. On test check basis, you can verify calculation of interest. That interest has been provided on all deposits up to the date of balance sheet. Interest rates are as per bank's internal regulation, RBI and agreements. Interest on savings account are as per the rules framed by RBI and bank. And interest on any inter-branch balance is as per the rate provided by the head office or RBI. So these 4 things we can check in. We can get an idea. What idea we have to get? That sub deposit पे interest पे हुआ है. ये आप कैसे check कर सकते हो? How can you check it? By doing sampling. Interest rates is as per the regulations. That again you can do few sample accounts. Interest on savings account is as per the RBI. Again few samples. And interest on inter-branch balances, which means my branch is having balance with other branch. It should be as per the rates prescribed by head office or RBI. Everyone clear? Any doubt till now? Any doubt till now? Quickly let me know. We are not left with much topic. If you have any doubt, we have time. We can go through it. Only 2 topics are left. No? Okay. What I'll do, just for your ease, this whole audit approach, I'll write down in a flow chart, okay? So we'll do a small flow chart. So let's understand, okay? What are we wanting to audit? Let's see. What do we want to audit? We want to audit interest expense. We want to audit interest expense. So we are seeing audit approach. Okay, we are seeing audit approach. So how to do it? First, what are we concerned with? We have to obtain reasonableness. We have to obtain reasonableness by doing analyzing. We have to obtain reasonableness by analyzing ratios on different types of deposits and different quantity. Okay, different quantum. This we have to analyze. What is the second audit approach? Second audit approach is weighted average interest. How do we calculate it? Weighted average interest rate. What do? Auditor will obtain deposits outstanding at each quarter end, multiplied by weighted average interest rate, and then compare with actual interest paid. Till now, everyone is clear? Okay. The third audit approach. The third audit approach is comparison with previous year. What again we do? We can do month on month or quarter on quarter by breaking up different types of deposits, breaking up different kinds of deposits, and again analyzing the difference. Okay. And what is the fourth thing we have to do? What is the fourth thing we have to do? On test check basis. On test check basis, we have to verify 4 things. Okay. All deposits, interest has been given. Next, interest rate is correct. Then, one second. Then, for savings, interest rate is correct. And for inter-branch balance, also saving rate is correct. There it is. Now, is it more clear? Now, can you see in one go? What do we see? Interest expense, we have to check reasonableness. We have to analyze the different ratios, different types, different quantum of deposits. Then how to do it? We can take weighted average interest rate on deposits outstanding at each quarter, multiply it with weighted average interest rate and compare with actual interest paid. Then third, we compare it with previous year on month-on-month basis or quarter-on-quarter basis, breaking up different types of deposits and analyzing the difference. And last, on test check basis, we check whether all deposits interest have been credited, interest rate has been correct, interest rate has been correct for savings account, interest rate has been correct for interbranch account. Now clear? Okay. Okay. So this is it now. Now you are responding. Now the energy has come back. Okay. All right. See, sometimes I want you to read book first and then I want to make a flowchart so that you understand that what the flowchart is doing. Because sometimes when I make it first hand, then you think, okay, it's the book is same only. But once we see and go through the book, then you'll understand through flowchart better. Okay. You'll also value it. All right. Now let's come to this part. For audit of operating, these both are direct questions. They come as direct questions. So how do we audit operating expenses? This time I'll write first flow chart for you, then we'll see the book, okay? Operating expenses, audit of operating expenses. Audit of operating. So operating expenses, you remember rent, light, electricity, staff salary, stationery, telegram, postage, everything is operating. So what is first important thing is internal control system. What do we have to evaluate? We have to evaluate internal control system regarding specially something called as authorization. Regarding authorization. So by doing this, we will know that how much we have to do audit procedure. So first, check the overall internal control system. Then you have to do trend analysis. Then do trend analysis for major items. Why? This year, your postage expenses has increased 5 times from last year. Why? So trend analysis is very useful. Okay. So last year, the postal expenses were say 2 lakh rupees. And this year it has become 10 lakh rupees. Why? So do trend analysis for major items. Next, perform substantive analytical procedure with respect to reasonableness. Check the reasonableness of the transaction. Check the ratio analysis. Okay. Check all this that if the bank is a small rural bank with only 5 employees, why is the T expenses 1 lakh rupees? That is called as reasonableness. Okay. So you can do reasonableness and ratio analysis and verify expenses with supporting vouchers and documents. Supporting vouchers plus documents, plus you can do some recalculations also. So if you remember, again, this answer is fully inspired from your essay 520. So how do you do audit of operating expenses? I have gone to a bank. I'm checking their operating expenses. First, I'll check their internal control system. I'll evaluate. Especially what will I evaluate? Who is authorized to do expenses? What expenses are commonly done? I'll do check the whole internal control system. Then I do the trend analysis for major items of expenses. Then I do substantive analytical procedure for the expenses like checking reasonableness, checking the ratio analysis. And then I verify the expenses and see if they have supporting vouchers and documents and do any kind of recalculations. This point clear? Can you remember all the 4 points? Can you remember all the 4 points? Okay. Internal control, trend analysis, substantive analytical procedure, and vouching and verification, voucher and documents. Okay, finished. So let's see the book. For audit of expenses, the auditor should study and evaluate the system of internal control relating to expenses, including authorization procedures to determine the nature, time, and extent of his other audit procedures. He should examine whether there are any divergent trends in respect of major items of expense. Perform substantive analytical procedures in respect of these expenses, like assess the reasonableness of expenses by working out the ratio to total operating expense, comparing it with corresponding figures of previous years. Verify expenses with respect to supporting documents and check the calculations. That's it. Okay. Now, next question. How to verify contingencies and provisions. Okay. Audit of provisions and contingencies. Audit of provisions and contingencies. So whenever you are checking provisions, the first most important thing is checking compliance. Okay. We are checking compliance regarding various regulatory requirements. So the first most important thing we have to check that if it is substandard, it should be 15%. If it is D2, it should be 40%. If it is D1, it should be 25%. If it's loss asset, it should be 100%. So first you have to see the compliance. Then you have to understand internal control system on how bank computes how the bank computes all the provisions. What is their method? Is it system generated? Is it done manually? So you have to check on what basis are they classifying. You also have to check on what basis classification is done. Because if classification is wrong, then provisioning will automatically be wrong. If you have wrongly classified something as D1, then automatically it should not be 25%. It should be substandard asset. So you have to see whether classification, what is the process of the bank. Okay. Then you have to obtain detailed breakup of all the standard loan and NPA and how much is outstanding. Get all the data. Get all the data that what are your standard loans, what are your NPAs, give me a list and let me see how much is outstanding. Okay. Then another type of provision. So these are all regarding, just mention here NPA, not NPA here. Here. This is asset classification. Okay. This is regarding asset classification NPA. I don't know what is happening, all these lines. Okay. Now, if you remember, we studied here that provision is not just for NPA. We have to do provision for tax also. We have to do provision for other things also. So as an auditor, when we are checking provisioning, are we checking only NPA? No. So now let's come to tax provision. So when we are checking tax provision, you have to see the computation. You have to see computation done by the management and whether it is considered appropriate. Next is any other provisions. Any other provisions? Then circumstances warranting the provision plus explanation from management. So I'll repeat the whole answer. Audit of provisions and contingencies. First, see everything is as per the compliance of the regulatory requirement. Then, if it is NPA, see the internal control system of how bank computes its provisions and on what basis the classifications have been done. Then get a detail of breakup of standard loans and NPA and how much is outstanding. With respect to tax provisions, check how it is computed and whether it is appropriate or not. And with respect to other provisions, ask why they have done provisioning and obtain explanations from the management. That's it. We are done with both the answers, which were the last answers of this chapter. And with this, your chapter is finished. Bank audit is finished. Now, any general doubts? We'll do one case study. We'll do one case study, everyone. Okay. Come to page number 10.50. Come to page number 10.50. We'll do one full case study. It will include almost all interesting points from the whole chapter. Okay. So it's a very good case study. Pay attention. CAM is conducting statutory audit of branch of MMC Bank. During the course, he noticed this. Loans under Kisan Credit Card KCC are given by bank to farmers to meet their short-term credit needs for cultivation of crops. Okay. In respect of one credit agricultural advance classified under Kisan Credit Card have an outstanding of 20 lakhs as on the year end, and there is no transaction in account for 90 days. The said loan has been granted for the cultivation of paddy, which is harvested in a period of 3 to 4 months from the sowing. The branch has classified the same account as standard asset. Is that okay? Firstly, tell me. This is not the question, but do you think is it okay? The classification of standard asset is correct. Kuldeep is saying correct. John is saying correct. Why is it correct? Because it is short duration crop. It will become overdue only after 2 crop seasons have passed. Okay. It will become overdue only after 2 crop duration seasons have passed. Okay. So it is harvested in 3 to 4 months. So 2 crop seasons. Correct. Let's see what the question will come. As of now, we don't know the question. We are just seeing the question. We are just seeing the case study right now. It is also observed that account of one borrower availing CC limit of 50 lakhs was taken over from another bank. Okay. The proposal was sanctioned by branch manager instead of immediate next higher authority as required by manual of delegation of power. Okay. What is this wrong? What is wrong in this? Tell me. It is observed that account of one borrower availing cash credit limit of 50 lakhs was taken over. The proposal was sanctioned by branch manager instead of immediate next higher authority. So what violation has happened? What violation has happened? Internal control system. Unauthorized sanction. Very good. It is noticed that head office of a bank has flagged a savings account maintained in branch in which interest was wrongly paid at higher rate due to wrong data feeding entry. Now, situation has been rectified by debiting the excess interest in the account, but since there was little balance in saving, a debit balance of 1.5 lakh is created in saving account. So it has become like an OD. The matter was immediately informed to account holder. However, he has not turned up for the payment since the matter was informed to him 6 months ago. Paise leke farar. There are many cash credit accounts in the branch. Such borrowers are required to submit monthly stock statement showing DP. Okay. One borrower has availed housing loan and a car loan from the branch. Housing loan EMIs are due for 120 days as on balance sheet date, and car loan EMIs are overdue for 60 days as on balance sheet date. Okay, so we have all the information. Now we'll go to the answers. What is the question? As regards description of agricultural advance, which of the following statement is most appropriate? The branch has erred means made an error. In making classification SBI RBI norms, it is a substandard asset. The classification made by branch is proper. However, there are no transactions in the account since 90 days. It is an SMA account. The classification made by branch is completely proper. The branch has erred in making classification. It is a doubtful asset. What is the correct answer? What is the correct answer? Don't look in the book. Tell from the question. The correct answer, Pooja is saying C, Pooja B is saying C, Pranav is saying C, Anil is saying C, Kuldeep is saying B. Next, Diya is also saying C. Kuldeep has changed his answer to C. So the correct answer is C. Why is it correct? Because it is an agricultural advance where the overdue or NPA is only counted if it has become overdue for at least 2 crop seasons. Regarding taken over account, which of the following is more appropriate? It is an taken over, you remember? This they have taken from another bank and instead of higher authority, branch manager has sanctioned it. It is an internal issue of the bank and auditor is not concerned with. It is an internal issue of the bank. However, auditor may at his discretion report it. It is a serious violation of laid down procedures of bank for sanction of advances and should be reported by auditor without fail. There is no issue involved as credit facility was properly sanctioned. What is the correct answer? 2. C, C. Everyone is saying C. Correct. Good. As regards debit balance, this is that another point question where they wrongly credited him with large interest amount, then they debited. So as regards debit balance of 1.5 lakhs in savings account, which of the following is correct from point of view of an auditor? This situation, so I'll just revise that they wrongly paid higher interest rate, then they reversed the entry, but there was no balance in saving account. So the balance saving account is showing negative balance now, which means it has become overdraft. So bank, the matter was immediately informed, but since 6 months, he has not come back. So the situation does not attract any RBI norms. The debit balance of 1.5 lakh should be classified as NPA. The situation does not attract RBI norms on asset classification. As no credit facility was granted, the bank cannot demand excess interest paid to account holder. What is the correct answer? 3. For 3, what is the correct answer? Debit balance becomes an NPA. Correct. Because he used up the money that was not his, okay? And bank informed him and still he has not repaid. Next, which of the following is not true about drawing power? Drawing power refers to the amount calculated based on primary security less margin at a particular date. It is always less than sanction limit. It can be different from sanction limit. Creditor for goods are reduced for the purpose of drawing power. Which of the following is not correct? Adil has said B, Pooja has said B, Linga has said B, Archana has said B. Very good. This is not correct. It can be equal to. Very good. Considering housing loan and car loan availed by borrower, which of the following statement is appropriate? What was the point? That housing loan has become overdue for 120 days and car loan has become overdue for 60 days. Okay. Both housing loan as well as car loan should be NPA as per RBI. Housing loan should be NPA. However, car loan should be standard asset. Car loan should be NPA. However, housing loan should be standard asset. Both housing and car loan should be standard asset. What is the correct answer? What is the correct answer? All loans will be NPA. Good. So you have understood the chapter well. Yes or no? You have understood the chapter well. You are able to get all 5 correct. How many of you got all 5 correct? How many of you got all 5 correct? 5 out of 5 in exam. Pranav got all 5 correct. Who else? Okay. Kuldeep. 4 correct, Archana. Not bad. Not bad. All right. So here we are done with the chapter now. Please study the chapter well. I would like to wish you all the best for your exams. Prepare well. Do your chapters properly. And I hope all of you are perform very well in your exams, and all of you clear your intermediate, and all of you, go forward in your CA final. So I wish you all the best for your exams. I hope you enjoyed the session, and I hope you understood the chapter. Please follow all the things I have told you to revise the audit subject. And always remember, there is no secret, okay? There is only hard work in audit. If you do that with sincerely and consistency, you'll get good marks. Do your writing practice, do your reading practice properly. The only goal is that in that 1.5 days, you should be able to revise all the 11 chapters. Okay? All right. So if you have any doubts, I'll stay here for 1 or 2 more minutes. Otherwise, goodbye to all of you. Thank you so much, Kuldeep. Thank you so much. Thank you, Linga. Thank you for your kind words. Other sources, yes, Dia. It has a completely different treatment in books of accounts. It's sometimes part of your own reserves because it's your own money and it's your own subsidiaries and joint ventures. So it does not account for profit. Okay. Any other questions? Okay. Technical team, I think we don't have any other questions. All right. Okay. Goodbye, students. Take care. All the best for your exams. Yes, I think no one is asking question. I think we can end the lecture, Manishji. Yeah. Kuldeep, you are raising your hand. 1 second. Yes, Kuldeep, do you want to ask something?
Yeah, madam. Good afternoon. Good evening.
Good evening,
Uh,
Kuldeep.
Madam, this last chapter is still pending, na? This 11 number.
Yeah, it's pending.
So it is your last class or?
Yeah. It is
Oh,
my last class.
okay, okay. It was very nice, and with the interacting, we got interest in this subject.
I'm
Uh,
very glad to know that.
thank you,
Yeah.
madam.
No
Thanks.
worries, no worries. Yeah. Okay, all right. I don't think we have any other questions. We can end now, Manishji. Okay.